PI Industries has made a small acquisition, you could call it a tuck-in acquisition if you will, a Plant Healthcare PLC for about 32.78 million pounds, 350 crore rupees approximately. Has been hailed as an acquisition in the biologic space which will give it a good foothold. That plus more, because we didn't get a chance to speak to Mr. Rajnish Sarna post the quarterly numbers, so good to get an FY25 perspective from him. He joins us right now on the show. Mr. Sarna, good having you. Thanks for taking the time out. Could you tell us the rationale for this and when does it start becoming accretive on the financials for you, this Plant Healthcare PLC acquisition?
Well, this is basically in line with our long-term strategic objective of building a differentiated, portfolio. While we have been working on, chemical innovation, chemical products, but also for last several years, as a long-term strategy, we were keen to build a differentiated portfolio of integrated products. Already we are working on certain technologies in the biological space. We are already doing reasonably well in India in terms of biologicals and growth of biological products. PHC has some unique technologies, particularly in peptides. And we believe that by combining these technologies, we will certainly be able to build a very interesting portfolio going forward. And able to, give sustainable solutions to the growers all over the world.
Okay. You mentioned a plan of a strategy. You've done, if I'm not wrong, some other smaller ones as well. Would you continue to pursue a string of pearls acquisition strategy in key areas, part one? And considering that Q4 and possibly FY24 saw domestic numbers not quite there, how do you expect FY25 to be organically, and could there be some inorganic moves on the domestic side?
Yeah, so you had two questions. Let me try and answer. So one about the acquisition strategy. Yes, our objectives has been to kind of create newer growth engines in PI while we are doing reasonably well for last, I would say, more than a decade. To sustain the growth momentum, we are building a lot of these growth engines. Like you mentioned, last year we did a few small acquisitions in the pharma space. And there also we started with relatively smaller acquisitions, and now we are building a differentiated CRDMO business model by combining our pharma research facilities to ASM, RSMs, and also having our API manufacturing setup in Europe. Same way we have done now, we have taken initiative in biologicals, and likewise we will continue to look for opportunities in technology areas whereby we can kind of acquire, combine, and also kind of scale up those technologies by combining them with other complementary technologies that we are working. Coming to your other question on domestic, yes, last year was a subdued performance. Overall industry was not able to do great given the agroclimatic conditions and general sentiments that was around the destocking, generic prices, etc. Well, we have I would say a good monsoon forecast this year. Although if I see first 2-3 weeks, the progress is not as expected. Still, I see some shortfall, but it's too early to kind of, to kind of conclude anything. We still believe, as the meteorological department also believes, that we have a good monsoon this year. And if that is the case, I strongly believe that we will have a reasonably performance, a great recovery from the last year, how we did in the domestic space. We have a lot of new products that we have commercialized. We have introduced in last 2-3 years. They are doing very well accepted by the farmers. We have a host of new products to be commercialized in coming year. Okay, so yes, if agroclimatic conditions are reasonably good, we should be doing well.
Some notes that I had read post the earnings, which said that the elevated inventory levels in the industry and price pressure from generics might stay for a better part for the next few quarters, and recovery, if any, will only happen in the latter half of FY25. You believe there is a possibility that it could happen earlier as well, given the monsoon?
Well, that commentary is majorly for generic products. Okay, commodities and generics, and as a business model, PI is not so much so in those kind of products. Most of our products are in-licensed products, exclusively being marketed by us in India. And for these kind of products, I'll not say they are absolutely not impacted by the overall sentiment in the market. They do. But, and of course, the agroclimatic conditions also impact their demand as well. But yes, if agroclimatic conditions are reasonably positive, I think we should certainly be doing much better than, the generic product suppliers, because their markets, their revenues and prospects will surely be continue to get impacted with this overall sentiment that we are seeing on pricing. We have been seeing this not only in India, by the way, for global markets, we are seeing this situation. If you see last year, 2023, even the global market has posted maybe a lower single-digit kind of degrowth, which is only coming mainly because of price and currency, not because of volumes. Volumes have still grown, but only because of pricing, and that too of these, generic products, commodities and generics. So yes, I mean, if the agroclimatic situation is better this year, we believe as a company we should be doing reasonably well.
Got it. So the 15% formal guidance bakes in the agro and the generic demand, as well as how people are talking about pyroxasulfone subdued performance. All of that is baked into this 15% number. If anything, there is a chance of you exceeding this 15% number and maybe going back hopefully to your 18 to 20% number as well.
Well, there are many factors, as I just mentioned.
Right.
Just started the monsoon. I mean, we have to very carefully watch how monsoon progresses. The global industry situation also we just talked about that. Yes, yes, this is true that the inventory levels have reduced, coming to a normal level, but still wait and watch is there. And as you will hear, most of these global companies, as they are also kind of giving their commentary, they also believe that next couple of quarters are going to be reasonably tough because of still the kind of destocking, pricing adjustments, etc., are happening in some of these segments and markets. So considering all these aspects is what we had indicated that this year we are targeting to achieve close to 15% kind of growth. Yes, there are certainly some upsides there, but then there are also going to be certain contingencies. And
of course.
keeping all that in mind is what we have indicated.
Got it. Yeah, I mean, the end user industries guidance numbers haven't looked particularly great. Agree. I'm out of time with you, but I just have one more question, Mr. Sarna, before we let you go. And that's on Capex intensity. Now, 1,000 crores, decent number. Would you believe that the opportunity exists to up this, or is this a number that you would be happy with looking at the current business landscape? And how do you see this evolving as the year goes by? Because a lot of points around how the Indian growth might continue to look solid even as the global growth kind of tapers off or stagnates.
Yes, so there are many opportunities. I mean, if I look at our domestic business, if I look at our exports, the kind of pipeline business pipelines that we have, more than 45, 50 projects that we are working in R&D on CSM side. So as this R&D pipeline progresses, obviously we will be keep reviewing, these Capex plans as well. Beginning of the year, what we have indicated is basis our current, visibility at that point in time. But we will surely be reviewing, and there could be opportunities where we can expedite some of these projects, and then this spend could be higher than 1,000 crore, but given today's visibility is what we have indicated.
Fair call. Okay, Mr. Sarna, we'll leave it at that. Thank you so much for taking the time out. Congrats on this acquisition. Wish you all the best for many more.